medication and emergency contraception while urging Congress to pass legislation.
Welcome to the Cryptocurrency Odyssey Show. The Cryptocurrency Odyssey Show highlights the latest news on cryptocurrency, blockchain technology, disruptive technology, economics, and world events. They interview top thinkers and entrepreneurs in the industry, and they cover topics like Bitcoin, technology developments, investing, trading, and ICOs. As our world keeps getting more and more digital, cryptocurrencies are changing along with it. Okay, audience, here's the host of Cryptocurrency Odyssey, Matt Leach.
Hello, listeners. Welcome back. Today's show is about cryptocurrency exchanges. That's more about cryptocurrency exchanges because we've been talking about that for a couple of weeks now and how that affects you. We're going to talk about all the intricacies of Voyager today and get us all more educated about the platform and what's going on, and we'll see how it all works out. My co-host today is Noah Leach, and he'll be helping me educate all of us about this. Hi, Noah. How are you doing?
How you doing?
Pretty good. It's another wonderful day here in the neighborhood, and right now I'm going to give a quick description here about exchanges and how they function in the cryptocurrency network. The show today, again, as I said, is a continuation of the explanation of the current state of crypto exchanges and the crypto industry. We've adapted some of the content, of course, because we've had a lot more questions about exchange information since we've been having all these problems with the exchanges. We'll have a look at how, as a user of crypto exchanges, cryptocurrency could be an economic path to freedom for you. But first, a quick review of what an exchange is. You've probably heard about the latest exchange problem that's popped up in cryptocurrency, and this one has the government asking questions, which is not good. The exchange is Voyager, and they're the latest casualty, basically. Some of the reasons the government's asking questions is that Voyager and customers may not fully recover their assets. They said in the beginning that there wouldn't be a problem, but now it looks like it's a problem. Voyager attempted to reassure customers that all is not lost. There was some angry customers out there that threatened the company executives after their accounts were frozen. Now, can you imagine that? Now, the Federal Deposit Insurance Corporation, which protects customers in the event of certain types of bank failures, is looking at how bankrupt digital asset firm Voyager marketed itself to customers. And that was a spokesman from the agency who said that. Voyager is the latest casualty of the turmoil in the crypto markets. They have publicly said that any U.S. dollars deposited with the firm are covered by FDIC insurance thanks to its partnership with Metropolitan Commercial Bank. Wording posted in 2019 on a company webpage stated that the protection would take effect in the rare event your USD funds are compromised due to the company or one of our banking partners' failures, according to the Wayback Machine. Now, the Wayback Machine is a archive of internet content that you can go back to and check out neat little things like this. Meanwhile, Metropolitan Bank issued a statement recently informing Voyager customers that FDIC insurance coverage would only be offered if the bank itself failed and not in the event of Voyager's failure. Voyager declined to comment on that when asked about the FDIC probe. So the U.S. government has been increasingly concerned about companies making advertisements, making false advertisements to consumers about deposit insurance. FDIC in May put out a final rule barring firms from making those kinds of misrepresentations or misusing the FDIC name or logo. Those that violate the rule face enforcement action, including penalties. At the same time, the Consumer Financial Protection Bureau issued a warning on the topic, saying the issue has taken on renewed importance with the emergence of financial technologies such as crypto assets, including stablecoins. And the FDIC spokesman emphasized in an email Thursday that while Metro Bank is FDIC insured, Voyager is not. Therefore, deposit insurance does not protect customers against Voyager's default or bankruptcy or withdrawal freeze or anything like that. Loss in value of the products is also included. The spokesman said. So the CFPB declined to comment on this one, and they paused about customer deposits and withdrawals and then filed for Chapter 11. So that's where they're at today. They're doing a Chapter 11. Social media has been abuzz with confused and frustrated customers who fear they'll never get reimbursed for their crypto and cash holdings. Some said that they felt misled by the company prior to statements about FDIC insurance. And so that's why the government's taking a good hard look at them. And now that we got that out of the way, let's talk with Noah about the situation. That Noah, how do you avoid a company like Voyager when you invest?
Well, doing your due diligence and your research is an absolute must, especially when you got a company like Voyager, who pretty much is just a crypto hedge fund, claiming that they're FDIC insured, which is going to be a huge legal hurdle for them if these customers decide to sue, which I don't know if they'll be able to get much from them, but, the option's still going to be there because they're not a bank. I mean, I looked it up, I was doing some research and I found out that, Voyager is not a bank, so therefore they're not FDIC insured or FDIC insured. The Metropolitan Bank there, I guess it's what their parent company is, or maybe their partner or something like that. They're an actual bank, so they're insured, but Voyager was trying to say, because we're partnered with them, or they're our parent company, or whatever it is, whatever their relationship is with Metropolitan Bank, that covers us as well, which obviously turned out to be false. And that's where you, the consumer, has to do your research, especially when it's your money, because you need to make sure that your money's safe as possible when you're putting it into companies like this. Voyager might have looked like a good investment because of their ARP or whatever their percentage, their yearly percentage that they give you on your money. And that's why a lot of people were using them, is because I think they had like 9% back or something, which is better than any bank could ever give on your just putting your money in there and holding it on their platform. Mm-hmm. But now we're seeing what's actually going on with that company itself. And I believe that those people that are out there that did put their money in Voyager are definitely not going to be getting it back, because any secured creditor is going to get their money first before a customer does, because when you put your money in there, like we talked about a couple months ago in one of our others, you're considered an unsecured creditor, when you put your money into one of these platforms. And that's why doing your due diligence and your research is imperative when you're putting large sums of money into these companies. A couple $100 you might not scoff at, but somebody else probably would. They'd be like, well, that was my money that I put in there. I was expecting to make $9 a year off of it now, or whatever, and now I'm not going to make anything because they went under. And, that's just the way it's going to be. And if they can sue that company, I believe that they can. And will they get anything out of it? Probably not, because that Chapter 11 is going to wipe all that out, and you're going to be SOL. But you could still sue them for the way that they marketed themselves. Right. And that's what's going to happen, more than likely. trying to sue them to get your money back, probably not going to work out in your favor, but suing them because they falsely marketed themselves as FDIC insured, that's 100%. You're probably going to get a payout on that. But if they're going to have the money to pay anything anyways, it's still up in the air.
Right.
But I would believe that even though if they are LLC, which I'm sure they are, I don't know if LLC protection is going to kick in when you make false claims about your company's insurance or anything like that. I would believe that the people that run that company are going to be responsible for that, regardless of what type of protection your company has under LLC or incorporated or anything like that, because you guys falsely claimed something that was not true. And so, that's also why the federal government's coming in to look at them. Plus, it'll give them all the ammo they need to get some regulations passed through on crypto.
I was just going to say that the federal government's looking at this one, but they will probably go industry-wide now.
Oh yeah,
all the exchanges will get checked out.
Oh yeah, most definitely. They're probably already started. And they're probably have a little task force or whatever you want to call it, maybe a committee, since it's the government, that'll be looking at how they bill themselves and if what they're saying is true or not. Because as far as I know, the only people that can get FDIC insurance are going to be actual banks,
right?
Not these crypto firms or anybody like that. They could be partnered with a bank, but that doesn't mean that they're going to have the same protection as the bank.
Right. They're not paying for that insurance.
Right.
The bank has to pay for
Yeah,
FDIC
like you said, the
insurance.
Wayback Machine is a good resource for that archive, because it shows how they changed the wording on their website after it was found out that they weren't FDIC insured. And I'm sure that the heads of the company knew that. I mean, you don't run a big company like Voyager and not know what protections you do or don't have, because that'd just be sloppy work.
Right, right. You probably have to know that for your own insurance. I mean, they got to have some kind of business insurance.
Right. Well, just not that, but
right.
They probably have a legal team too, and their legal team should have been like, "Hey, you guys aren't FDIC insured. You can't put that on your website."
Yeah.
You can't say that you are because you're partnered with this company or you're partnered with this bank. The bank is, but you're not. That doesn't extend to you.
Yeah, it doesn't extend to them.
And even the FDIC said so in a statement. They weren't. They weren't covered under FDIC insurance, and that's the big thing that you need to find out when these companies, if you're looking for a place where your money will be safe, or if the company does go under, who's going to pay you out.
Mm-hmm.
And that's the thing about them, is that, well, you're probably going to lose your money. And those few people that put in like $30,000 to $70,000 that I read about in one of these articles that I know I sent to you, they're probably going to lose all that money. And, they're going to have to build from scratch, which is going to suck.
Mm-hmm. Well, let's see, Voyager, you stake your crypto on Voyager and then they lend you dollars on that. Isn't that how it works?
If you stake your money on there, then you're just providing liquidity, so they'll give you like a percentage rate back, So like if you were to stake $70,000 on there, for one example, and the percentage rate I think on their platform was 9%, so you'd get almost, you get 9% back yearly for providing that liquidity, which is quite a bit of money in that instance. But if they go under, you don't have any protections.
Mm-hmm.
There's nothing you can do.
Right, because the crypto itself is not insured. So
right.
What I was wondering is, I guess the bank is insured on the money that they lend out, though, right? Isn't that
the bank would be, but
so the people who they lend the money to, then they're still expected to pay it back.
Right. They'd be considered a secured creditor, because more than likely they use those people's crypto
mm-hmm.
as collateral.
Right.
So the bank now will more than likely own that collateral and that's why they can't. That's why there's a freeze. They can't pull anything out because now they're in Chapter 11. The bank has frozen their assets anyways and said, well, this is ours now. And, you know, when they go to court, more than likely that's what's going to happen, is that the bank is going to get all that crypto. They're going to turn around and probably either hold on to it or sell it to recoup the money that's owed to them by Voyager.
That's an interesting concept. That might be the big trial of the year
For the crypto for the crypto area, yeah.
for the
you
crypto
know.
industry.
Yeah. People are going to be watching that like white on rice to see what what happens. And I think my prediction is going to be that Voyager's going to, anybody who had their money in Voyager is more than likely going to lose it. More than likely. Crypto assets on there are going to get lost because more than likely Voyager used that crypto as leverage to get loans from Metropolitan Bank.
Right.
And so now Metropolitan Bank is going to own that. Mm-hmm. And, you know, if you had money in Metropolitan Bank and Metropolitan Bank went under, FDIC insurance would kick in up to $250,000. But
that's not what it was.
that's not what. Yeah, it doesn't extend to Voyager.
So when the bank ends up with all this crypto that they didn't ask for, what do? They would just turn around.
I figured
and
that
sell
they'd
it to
turn
pay
around and sell it to
pay the
recoup their
bill.
money.
Yeah.
So,
Okay.
I mean, you know, it's up to obviously the bank to do with it what they will, but that's more than likely what they're going to do.
That sounds like pretty steady. Now, Voyager said that the exact amount reimbursed to users will depend on what happens in the restructuring process and the recovery of 3AC assets. What is 3AC? Do you know?
They're another like hedge fund, crypto hedge fund.
Okay,
that's
so-
another company. Yeah.
So they're using they're using the crypto to back up loans and also a hedge fund. So the hedge fund probably provides cash to them. Is that how that works?
When you put your money into Voyager, Voyager's like a hedge fund pretty much for cryptocurrencies.
Okay.
So is 3AC, and they're one of the big ones that's also going under, I believe, or in trouble, and a lot of trouble, because when you put your money in there or your cryptocurrency in there, they use that crypto as collateral because you don't own it. All right,
Right.
you own the rights to buy and sell that crypto at the current market price,
Right.
just like you would a security, and that's how they're treating it. And then since that crypto has cash value, a bank will loan it out if you have enough of it. You know, so if you have $1 billion worth of crypto, they might give you a 2-to-1 and loan you $2 billion based off of that $1 billion you have as collateral. But that's it, you know. So if you default on your loans, which is what's happened with 3AC, I believe, as well as Voyager, now guess what? Yep. Well, we got the collateral. They can take that collateral immediately, and that's what Chapter 11 bankruptcy is also supposed to protect the company as well, while they reorganize their debts and, you know, restructure.
They're going to restructure, yeah. I'm not real familiar with 3AC. Are they like they're a hedge fund? Or are they a big hedge fund?
I'm not too sure exactly how big they are, but I know that that in a lot of articles I've been reading, they've been intertwined with like Voyager and a couple other cryptocurrency places where you can store your money, you know, like crypto markets or whatever.
Okay.
And I believe that they were one of the big ones that tanked and was somewhere in like $1 billion worth of debt that they couldn't pay, you know. They couldn't pay on their obligations. So I know that they were one of the big ones that went down, and then now Voyager's going down along with them. So,
okay. I hadn't heard about the 3AC, but that's interesting because if the hedge fund probably deals in cash, in dollars, right? So
I mean, they deal with the crypto. They're pretty much trading crypto as a security, I would imagine, in order to make some money, or holding on to it, you know, to increase profits for themselves and their customers and get a little kickback.
So they're a crypto hedge fund.
Yeah.
Okay. That's a interesting way to look at it, a crypto hedge fund. So I'll have to get a little more research done on that. So anyway, following the Voyager digital filing for bankruptcy on Tuesday, the crypto lending firm said its recovery plan was aimed at preserving customer assets, but did not explicitly state it would be able to return all equivalent funds to affected users. And then in their blog, Voyager said it had roughly 1.3 billion in affected users' funds, in addition to 650 million of claims against Three Arrows Capital, another one that's
they blamed three, which is 3AC. They blamed them for not being able to pay their loan back, and but it's like I'm sitting there thinking, well, you loaned them out $650 million, and now you don't have the money to cover that.
mm-hmm.
So
this,
now that put them, they pretty much they overextended themselves as a crypto firm, that's what I believe a lot of these crypto firms have done, because they got greedy. Instead of looking at the numbers, they were like, well, we can afford it right now, but what happens if the market tanks? Can you afford it then?
Yeah.
And they were looking at they were looking at the right now and tomorrow, but not next week.
Yeah, exactly. And, the market was hot there for a while.
Yeah.
And I can see where they were out for, out for business, basically. And it looked like, it was going to be infinite, with cryptocurrency.
I should start one. I could probably do better than these people.
Yeah.
I mean, it's like, you guys are supposed to be really good at this, right? You have the knowledge to create a company that deals with billions of dollars worth of money, but yet you can't see the writing on the wall before it happens. I mean, even I saw that and pulled out a Coinbase before the crash, and I got lucky. I consider it luck, but I was like, you know what? I'm not liking the way this is starting to look, so I just took my money out, even though, it was only a iffy. Maybe a if, I mean, I did lose about half of the money I put in Coinbase before I pulled out, but I decided to cut my losses.
Yeah. Well, that's, I mean, this all goes back to the Luna crash. Okay. One small, well, I guess Luna wasn't a real big rich coin yet, but they were on the way. And because of that algorithmic problem in the, data stream, I guess that's what tipped them off, and now the whole market is in this big kerfluffle over everything.
Yeah,
and,
I mean, it'll definitely, crypto's going to survive no matter what. So it'll definitely, with knowing that what happened with Luna now, they can stop that from happening in the future, just through some research and whatnot.
Well, we hope that's true. A new version of the collapsed Luna cryptocurrency is already live on major exchanges, and it seems like it's gotten off to a bad start. Last week, supporters of the Terra blockchain project voted to revive Luna, but not Terra USD, a so-called stablecoin that plunged below its intended peg to the dollar, causing panic in the crypto market. And more than panic, now we've got people who are going to lose it all. So it's worse than just panic. Terra USD, or UST, is what's known as an algorithmic stablecoin. It relied on code and a sister token, Luna, to maintain a $1 value. But as digital currency prices fell, investors fled the stablecoin, sending UST tumbling and taking Luna down with it. At its height, the old Luna, now known as Luna Classic, had a circulating supply of over 40 billion. Now Luna has a new iteration, which investors are calling Terra 2.0. It is already trading on exchanges including Bybit, Qcoin, and Huobi. Binance, the world's largest crypto exchange, says it will list Luna on Tuesday, but the launch hasn't gone well. After reaching a peak of 1953 on Saturday, Luna dropped as low as 439 just hours later. according to Coin Market Cap data. It has since settled at a price of around 590. So when I looked at Luna, I guess it was on Friday or Thursday, it was still at zero. Now they're telling me that it's at 590. So what have you got there on the
let's see what Weeble
on
says.
the old Weeble? Okay, the Weeble exchange.
Let's see here. I'm looking for it. Let's see here.
So analysts are deeply skeptical about the chances of Terra's revived blockchain being a success. It'll have to compete with a host of other so-called Layer 1 networks, the infrastructure that underpins cryptocurrencies like Ethereum, Solana, and Cardano.
Well, it's at 0.0000965 right now, so that's like what, 1/1000th of a penny or something like that.
So
that's Luna Classic.
So then it's actually dropped pretty much. That's a long way from what did I say, 490?
Well, no, that's Luna Classic, not 2.0. Let's see where 2.0 is at. Let's see if it's even listed on here yet. It should be, I would think. No. Yeah.
Okay.
Yeah, I don't see it on here.
Okay.
Probably have to look it up on CoinMarketCap.
Okay, audience, quick reminder, you're listening to Cryptocurrency Odyssey, airing live weekly on KWRH 92.9 FM on Fridays at 10 a.m. in St. Louis, and nationwide on Zeno FM. With your city in there, you type in zeno.fm/Detroit or whatever your city is, and you'll be able to pick that up. Monday to Friday at 11 a.m. and 4 p.m. If you like what you hear and would like to sponsor us, please give us a call and let's talk. We do have a coin that you can mine with on an Android phone also. It's a new one. You get the coins at a low price as they're already listed, and you hold on to them right now. You don't want to try and sell them. It's a special one called Loop, and you can work it for a year. It's on the Bitmart exchange, and we'll show you how to get tangled up with that one. You can call us at 314-781-7612 or 877-212-1400. You can email me also at mlcryptodude@gmail.com, and I will email you the link to get started. Looks like we've got about 30 seconds left on the clock here before we do our advertising blitz. So I want to kind of remind you to watch us during the week. The days that we're not broadcasting, we're on Facebook at Cryptocurrency Odyssey, and we are working on a new YouTube platform where we will be able to talk to you there too. So here we go into our advertising blitz. There'll be about 5 minutes of advertising. If you see something you like, buy it, and we'll be right back.
Commercial Energy Consultants is a 10-year-old company focusing on middle to large commercial accounts. CEC offers these companies services by lowering their electric and natural gas rates. They don't charge for this service, and they've got over 9,500 happy clients with over 1 billion kilowatt therms under contract. What makes them different is their reverse auction. CEC offers a way to have available suppliers in 17 states bid openly for energy business. Why, their mission is clear. Bring their clients the low bid for their energy consumption. In fact, because of their competitive auctions, energy consumers would be well advised to consult with CEC first. Why pay more for the exact same power? For more information, contact Mike Grimes, CEO of Commercial Energy Consultants at 1-877-212-1400. That's 877-212-1400.
Hey, listeners, saying thanks to your customers is nice and polite, but expressing your gratitude in memorable and ongoing ways can boost your business. At Promo Experts LLC, we exceed our customers' expectations. For over 20 years, our product knowledge and experience has helped them with their marketing initiatives and trade show graphics. We are happy to put that experience to work for you. Quality products, great customer service, and prices are our #1 priority. We work with you to find unique, creative, and new ideas that fit your image and expectations, helping you build strong relationships with your customers. When you select Promo Experts as your marketing partner, we help you to see more than the big picture. For more information about this exciting opportunity, contact Diane Carson, President, at 636-458-5241. That's 636-458-5241. Let Promo Experts help you to move your business brand beyond the bland.
Attention! Here are 5 things that you can do to avoid coronavirus scams based on the Federal Trade Commission guidelines. Number 1, do not respond to text messages, emails, or calls about checks from the government. The government never sends emails requiring that you do anything. Number 2, ignore online offers for vaccinations and home test kits. Number 3, hang up on robocalls. Scammers are using illegal robocalls to pitch everything from low-priced health insurance to work-at-home schemes. Number 4, watch for emails claiming to be from the CDC or the WHO. Use sites like coronavirus.gov or usa.gov/coronavirus to get the latest information, and don't click on links from sources that you don't know. Number 5, do your homework when it comes to donations. Never donate in cash, by gift card, or by wiring money. For more information to help you be prepared, contact Tony Zifilopoulos. He's a 25-year IT professional with the last 6 years specializing in cybersecurity. Tony is a certified information specialist auditor, and he will review your cybersecurity. Tony can be reached at 314-504-3974. That's 314-504-3974. And email TonyZ@fixvirus.com. His website is www.fixvirus.com.
Have you always wanted to write your own book but don't know where to start? Publishing Concepts, a publishing company located right here in St. Louis, offers everything from consulting, book printing, copyrights, ISBNs and barcodes, print book layout, ebook and iBook layout, graphic design, cover design, ghostwriting, typing and editing, distribution, marketing, and more for an affordable price. Visit publishingconceptsllc.com or just Google Publishing Concepts to get started today, or call 314-781-8880. That's 314-781-8880. Publishing Concepts. We help you sell more books.
Hi, listeners. Welcome back. We want to continue on with our cryptocurrency show. Today we're talking about exchanges, particularly Voyager. One thing that Voyager is doing, in addition to crypto assets, Voyager said it was holding funds equal to the amount of USD in customer accounts in a special FDIC insured account at the Metropolitan Bank of New York. FDIC protection guarantees up to $250,000 per customer should the bank fail, but not the lending firm. Voyager added that it was working to restore access to USD deposits, subject to a reconciliation and fraud prevention process, which I guess is kind of like a KYC process. Would that be close? Know your customer?
Yeah, I guess so. I mean,
I'm not really sure what that means. Subject to a reconciliation and fraud prevention process. You know, you got to prove who you are
to try
get your
and
money.
stop people or the company from claiming that they had more than they, or that they are owed more than what they are owed. And the reconciliation is just probably part of the Chapter 11. But
Okay, yeah.
unless they can show proof that they have that money in accounts with Metropolitan Bank, I wouldn't believe a word they said, because they've already shown that they've said, oh, well, we have, we're FDIC insured, but yet you weren't. You're not FDIC insured. That's why you had to change the wording on your website, because you lied. So are they lying about this or not? They might be, they might not be. I mean, they're already in some legal trouble as it is. So, we'll see what happens and if people actually do get their money back or not.
Yeah, that's something we're going to see for sure, I guess. Now, Voyager had issued a notice of default to 3AC on June 27th, later citing the firm's failure to pay as one of the reasons behind suspending trading deposits, withdrawals, and loyalty rewards. The lending firm also announced it had borrowed 15,000 Bitcoin, roughly 500 million at the time, from Alameda Research, claiming the funds were aimed at covering losses due to 3AC. So it looks like there's a lot of Bitcoin that's going to be involved in, huh? I mean, 500 million's a nice little chunk.
Yeah, just a nice little chunk. Yeah.
A half a billion. So Alameda Research is tangled up in this too now. So again, this whole thing it's another Luna type thing, where Luna went down and everybody lost their shirt. Now it's continuing on because the people that are trying to recover from it are apparently unable to recover from it. So, in addition to the legal solutions Voyager's exploring with 3AC's repayment, the company said it was pursuing various strategic alternatives to evaluate the value of the standalone company compared with a third-party investment or sale. So, data from TradingView shows the company's share price has fallen more than 98% since its yearly high of 2035 in November 21, reaching roughly 27 cents at the time of publication. So things aren't going well for them, is what this means. And how it affects the rest of the crypto market, I guess that's what we're going to see here. Right now, my big question right now is how many more companies do you think will be going through similar issues in the future, and how many prospective companies are there right now?
Well, I mean, without them saying that they're in the same boat as Voyager or 3AC or whoever, we just don't know yet. But I can bet that if they overextended themselves like Voyager did, then they're probably going to be in a similar boat, and we'll probably be hearing about it slowly trickling out, the news trickling out about it over the next few months, as the crypto winter continues. So we'll see what happens.
Yeah. So has the government said anything about that? Or what is a crypto exchange? Do they have to make like a quarterly report?
I don't know if they have to or not. I would assume that since they're dealing with billions of dollars, they probably do have to give the IRS or the federal government some sort of information. But what information they give and how much, I don't know.
Yeah, because of the lack of regulation in crypto.
Right.
And that's why we have a decentralized market. But it looks like decentralized is going to become really
centralized pretty soon.
Centralized, well, maybe not centralized, but regulated anyway.
Yeah, somewhat regulated. I mean, this is going to give the government all the ammo they need to pass regulation. And that the banks are going to be telling the government, yeah, let's do it. This sounds great. And of course, the regulation's going to benefit the people that are already in power more than it's going to benefit the little guy.
Probably, yeah. Yeah, we're going to regulate it, and if you're over 21 and you're not a big guy, well then, yeah, okay. So when you say crypto winter, do you mean the crypto winter we're in now, or the one that's coming, or what? Do you think there's another one coming?
we're already in it, so That's what the market's doing now isn't what we were hoping for throughout the year of 2022. But so, yeah, I mean, I don't know how long it's going to last, but yeah, that's what I'm talking about is what's happening right now.
What's
with
happening
the market.
right
Yeah,
now, okay.
And they're calling it the crypto winter. So, winter is coming.
Yeah, winter is coming. Yeah, exactly.
But it's already here.
A trustee appointed by the SIPC, which is another alphabet soup agency, has been recovering lost funds as part of Bernie Madoff's historic Ponzi scheme, and they keep going back to Bernie and comparing it to Bernie Madoff. And Bernie, I guess he died in jail a little while back, but he got like 120 years, was it?
Something like that.
Yeah, it was some humongous
And that's
number.
only because he stole from the rich.
Right, exactly.
If he
And
stole
that
from
was
the
whole
little
thing.
guys, it would have just been a write-off.
Yeah, exactly. But he stole from the rich people, and so he got many years. But I'm wondering, it doesn't seem like that's really a good comparison, because Bernie did it all on purpose, for one thing, and this is more like an accident that was waiting to happen.
The whole reason that they're trying to make it sound like that, or trying to compare it to a Ponzi scheme, is because that's the best way that people that haven't done any research can articulate what crypto is, and it kind of does sound that way when you think about what a Ponzi scheme is versus something else. I'm not sure exactly what else to compare it to that would be a good comparison or off the top of my head, but so you're putting your money into exchange, right?
Mm-hmm.
So you give that exchange liquidity by putting your money into it, and in turn they then take out a loan to against your liquidity to make themselves money, right? So if that's a Ponzi scheme, how is that any different from what a bank does or from what the stock market is? It's pretty much the same thing. You're putting your money into the stock market, which gives the stock market liquidity, and thus the people that own those companies can improve the company or squander it and go under, right?
Mm-hmm.
So how's it any different? And especially when you're treating a crypto asset as a security and not as crypto, like I do with Webull. I know that I plug that quite a bit and they don't pay me for it, but that's who I use. And I've
we
had
need to
no
put in a call.
real issues for it. Right. Yeah, we do.
Yeah.
Right.
Well, call them, hey, Webull.
I've had no big issues with it, but that's how I trade my crypto is as a security, because I prefer that versus trading it on a market and like Voyager,
Well, it might be a good idea to avoid crypto exchanges, but I don't know how else you're going to do that
at this time.
Yeah.
But even even Webull uses a third-party exchange called Apex to hold your coins. So if Apex goes under, I'd lose my money through Webull, and I'm not sure if it's FDIC insured. I'm pretty sure it isn't, because Apex isn't. They can't be. And Webull doesn't guarantee that I'll be able to keep my money if, say, Apex goes under. Now, if my stocks if like Webull were to go under, they are also considered a bank, I believe. And so my money in there would be protected, and I'd get that refunded through the FDIC, but not my crypto.
So companies like Apex or I guess you need to keep your eye on them because they're backing Webull.
Yeah, they just hold the money or the crypto for Webull, but I haven't heard anything bad about them because I don't think that they're using that money as collateral for loans, and that's what got Voyager in trouble, and 3AC and Coinbase and all those others. They were using that crypto and your money as collateral.
Okay, so that's the common denominator there.
Well, yeah, I mean they're acting like a bank without being a bank. You know, and that's what banks do, is you put your money in there, they use your money to loan it out to other people or to take out loans, you know, and that's why you can't just pull, if like your bank has an issue, that's why you can't pull your money out of the bank. And that's why the FDIC was created, you know, is to give people a reason to put their money in a bank, so that way they could do that.
Yeah. Okay. And, you know, there's a lot of reports about crypto investors are burning up social media after crypto lender Celsius Network said it was pausing all withdrawals. Now, that's kind of over old news. Okay. But I read somewhere that Celsius, I didn't read it. I heard this morning that Celsius is actually paying back the money, and they're planning on coming back, but they have found a way to pay back that loss so that they can continue on. But you know, again, I used to think that people probably wouldn't invest in that when it came back, or any other company, any other exchange that comes
See, that's
back
just
after.
like with Terra. You know, I can't believe that people are dumping more money into it. You know,
That's where I was going.
I would say that, you know, after the people that created Terra had to split off and create a Terra 2.0 to try and get this to come back, that it would just be too risky. I mean, crypto trading is risky as it is already. You know, it's already pretty darn volatile. So why would you take extra risk with people that couldn't do it right the first time with their second iteration?
Yeah,
you know,
exactly.
That's just, to me, that's just bad business.
Yeah.
You know, on my end, that would be bad business. You know, that'd be a poor decision.
Yeah.
So why people did it, I don't know. And now they're surprised that they lost more money to Terra.
Yeah.
I mean,
Come on.
you know, yeah. I mean, what more can you do to say, hey, shouldn't have done this? You know?
Yeah. I mean, look at their track record. You know,
I mean,
it's lousy. Yeah. Well, that's what my other co-host Mike Grimes, he was saying, they're telling you, listen, I lost you $40 billion, but I won't do it again.
Right.
So come over.
It's the same thing, you know. Why would you do that? You know, it's the way I look at it is that it's just too volatile of a market to put your money into something that is already proven to, or at least a company or a development team that have already proven that they can't do it once. You know, they did it right for a little while, but they failed miserably and lost billions of dollars. But hey, let's go ahead and create Terra 2.0 because people will still dump their money into that, hoping that we come back and make them rich.
Yeah.
And I'm like, no. You know, like, I'm going to be wary of Coinbase after Coinbase, $285 billion that they are having issues with. You know, I'm going to be wary of them. I'm going to be wary of pretty much everybody, but, you know, except for like places that have the money that aren't saying that they have issues. I mean, I know that Webull might be having issues because everybody's having issues, but at the very least, I have some confidence in their ability to maintain the small amount of crypto assets that I currently hold on their platform. And, you know, like SafeMoon, I got burned by SafeMoon because they took SafeMoon and did SafeMoon 2.0, which then consolidated all of my SafeMoon in a 10-to-1, and they were like, oh, well, it's still going to stay the same amount, and but then SafeMoon 2.0 tanked.
All right.
So then I ended up losing a ton of money, and I'm like, now it's back up, you know, but it's only up like, it's up like, sorry, it's up like 40% or something from its all-time low, but it went from like 1/10 of a penny to like 1/1000th of a penny, and that was right after the tanking, or you know, right after 2.0 came out, and I was like, that was a bad move because the whole point of me getting into SafeMoon was to buy it on the cheap, which I bought like 300 million coins worth of, and then when they do a 10-to-1 consolidation, now I have 300,000 coins, and I'm like, or maybe it was 100-to-1 or something like that. Either way, it went from 300 million to 300,000. And I was like, oh, you sons of, And so the whole point was for it to get to 1/10 of a penny, and then those 300 million coins make me a few $100,000, right? Or, a couple 100,000 or whatever it would be. And you can't do that when they consolidate down to so much, and now you're at 300,000 coins, and then you got to buy in at 1/10 of a penny, but then it tanks because of stuff that SafeMoon was doing and deadlines that they were missing.
Right. Now, does it give you the feeling that the exchanges are more out for money than they care for their customers?
That's the way it's looking right now. When you overextend yourself, you're thinking about your company and your profit and not maintaining your companies or not maintaining your customers' accounts. They knew what they were doing when they went out there and decided to take out loans and use your money as collateral. They were
Definitely.
they were trying to be stockbrokers without knowing how to be a stockbroker. Pretty much, they were trying to run their own bank without being a bank, and they didn't have any protections in place other than using their own money as protection. Like Voyager sitting there saying that, oh, okay, well, here, we're not FDIC insured, so we're just going to change it on our website, saying that we will protect your money up to $250,000, just like the FDIC does. But can you believe a company that just lied to you straight up on their website?
Yeah.
That's the question. And are we going to see if those people actually make their money, or at least get their initial deposits back? Who knows?
Yeah,
But
they don't have the money, so
I highly doubt it, because they say, oh, well, our money's in Metropolitan Bank special account, and I'm like, well, how does a special account, what is a special account? I would have to do more research into that, because I don't know if there is a special account that could hold, that you could put all your customers' money into and have it be insured by the FDIC at the very least, because as far as I know, they only insure up to $250,000 per account. So you'd have to open up hundreds, if not thousands, of accounts under your company's name, each with 250 grand in it, to make sure that your money is insured by the FDIC.
Right. So, the FDIC, that keeps coming up. So, the FDIC was put in place because of stockbrokers doing the same thing with your money. And so it's the only way they could keep the banks. People didn't want to put money in banks because they could just
that's
lose
what
it.
banks were doing. Yeah. And
So-
that's why the FDIC was created, to give people a reason to put their money into the banks. That way the banks could have liquidity to give out loans and other things. And that's why, if the same thing happened to banks, like it did, I can't remember when it happened, what year, or what decade it happened in, but when nobody could pull their money out of the banks. I think it was just around the Great Depression, if I'm remembering correctly.
1929 is when the
and
Depression
they
started.
stopped allowing you to pull money out of the bank, or they limited the amount of money that you could pull out, because of financial woes for the banks, was when they decided, well, we need something like the FDIC,
Right.
And being reactive instead of proactive, a lot of these companies came in here thinking, well, I'll take these guys' money and then I'll make more money with it and become a millionaire, billionaire. And then when the market goes south on them, they get wiped out.
Right.
It's like what happened with GameStop and the hedge fund. Name started with a C, but I can't remember the name off of the top of my head, where they got wiped out because they were betting that GameStop was going to go under, but then the price of the stock skyrocketed $300, and they didn't have the $1 billion for their margin call, or
Right.
billions of dollars for their margin call. So they ended up getting wiped out, and people were like, yeah, we just wiped out a hedge fund, but yet at the same time, they also wiped out billions of dollars worth of other people's money, but more than likely, those people will somehow recover.
Yeah. Well, if it was money, that they were probably insured. More than likely. That's that's the reason that we have the FDIC, is because the banks got greedy. People running the banks got greedy way back, and I guess, like you said, it was probably after the Depression, 1930 or so, that the FDIC started, and they started because of people losing their money in the banks. And so I suppose we'll have to have an FDI, what would it be, FDIC for cryptocurrency, I guess. You know?
The FDICC.
Yeah, the FDIC.
But who's going to run that, you know?
Yeah.
I mean, and what type of protections are they going to give, if any? I mean, if you wanted to do it the smart way, then you'd get insured under the FDIC as an actual bank, right?
Yes.
But these guys didn't want to do that. I think I would have, you know, especially if you're dealing with billions of dollars worth of other people's money and you're acting like a bank, then you should be getting insured like a bank. But I don't know what type of paperwork you need to fill out or what the requirements are to be FDIC insured.
Well, you know, you have to be a legitimate bank, I'm sure.
Yeah.
And then you would have to prove that you are, and where your funding is coming from and where you're keeping the money and all that type of thing. So the same thing would happen with crypto. And anyway, let me do a quick station identifier here. Listeners, if you're just now joining us, you're listening to Cryptocurrency Odyssey, airing live weekly on KWRH 92.9 FM on Fridays at 10 a.m. in St. Louis, Missouri, and nationwide on Zeno FM, / with your city. If you're in LA, put Zeno.fm / Los Angeles, and you'll be able to pick us up. That's Monday to Friday at 11 a.m. and 4 p.m. For more information, call me at 314-781-7612, and that number again is 314-781-7612, or call our 800 number at 877-212-1400. And you can also visit the website at ccod.us, ccodweb.us, and you can leave us a message there. Comments, anything like that are welcome. So I want to get to our next question, but I know that we're running out of time here, so I'd like to go back to our tip of the day, which is usually what I say at the end of the show, just to give people an idea of how they should be investing in crypto. And today's tip, when I find it here, is going to be, even though that we're not talking about risking human lives here, losing your coins due to trading without a proper guideline isn't a fun moment. So how can you avoid making costly mistakes? How can we ensure that we're always remaining on the green side? First of all, you need to understand that profitable trading requires a lot of attentiveness. It isn't a gamble, and nor should it ever be one. If you've not heard of the term stop loss in trading, check out this link to help you understand what it's all about. The link is on my website, ccodweb.us, and check out the link. You'll understand what it's all about. Every trade we get into requires us to know when to get out, whether we're making a Bitcoin profit or not. Establishing a clear stop-loss level can help you cut your losses, a skill that's very rare in most traders. Choosing a stop-loss is not a random activity, and perhaps the most important thing to note here is that you shouldn't be carried away by your emotions. A great point to set your stop-loss is at the cost of your coin. So give that a try. Looks like our time is up for this week, and we're Cryptocurrency Odyssey. We'd like to see you back next week. Check us out online at Facebook at Cryptocurrency Odyssey. And remember, don't take any wooden crypto.